Hello all. Today is the second session, which we'll be discussing today is transfer pricing documentation. The idea for today, the agenda for today will be just an introduction a bit into what is the US TP documentation about, and then the penalties involved with the US TP documentation, followed by the three-tier approach globally, which is local file, master file, and country-by-country reporting, and also how the way the US actually, when it goes for the audit, what are the principal documents with respect to the IRS, the US actually requests the taxpayers. So I think there are around 10 documents. So I think once we have the intro and understanding of it, probably we can go a little bit specific into what exactly US requests, and then are they completely aligned with OECD, or is there any new information that US requests? So I think that's the agenda. So I'll quickly start with a bit of an introduction. Again, please feel free to stop me and ask questions whenever you want to. So the first one we're talking about is the bit of an overview. As with respect to other countries, especially in the Asia Pacific or in the Africa or in the Europe, there are certain countries the documentation is more of a compulsory filing or upon request, but US transfer pricing documentation is more done from a penalty protection driven compliance exercise. So mostly what we have clearly seen is in terms of an audit, and so there is no request for you to like submit it on the deadlines. Only with the tax with the tax returns, there'll be only a form that you need to file. But in terms of actual documentation, like a full-fledged local file or master file, there is no requirement. But if there is any audit, there is then yes, you get 30 days to submit the documentation and the request based on the kind of request that they have. So we do have penalties in the section 6662E and H. It's we have like two kinds of penalties. One is primary one, which is like 20% addition to the tax penalty on the portion of the underpayment of tax, which is attributable to the accuracy related to misconduct, negligence, or disregard for the transfer pricing rules, or any substantial understatement of income tax or any substantial gross value misstatement. Then we also have the penalty rate may go as high as 40%, where you can see including gross valuation or misstatements. Further, a net adjustment penalty applies when there is a transfer pricing adjustment with respect to the tax authority. So these are the ones that we can clearly see. And it's also important to maintain documents, considering that the time to furnish is 30 days, and on a general way, it's impossible to prepare all the requirements in 30 days in terms of economic analysis, in terms of function analysis, and in terms of all the documents. Also, so there's there's an obligation on US corporations, which has like at least 25% foreign owned, to file an annual information return, which I was talking about, to report transactions with related parties. Failure to do so, again, $25,000 there are penalties to apply. And then they have also introduced the country-by-country reporting starting 2016. I'll further discuss the details on exactly what contains CBCR reporting and then what are the information that you have there. But yes, so non-compliance with CBCR or the notification, and generally notification are applicable to the foreign subsidiaries which their parent entity crosses certain threshold, which is in the Europe, it's 750 million euros, and then in the USD it's come close to somewhere around 850. And then again, they also attract penalties of close to like 25,000 or more, with especially regarding the foreign business entity. So just to give idea in terms of there are penalties, and then I mean in terms of what documentation and on how they can charge. So this is just to set a scene on what exactly is the US transfer documentation. And the next, we will discuss more particular into what is three-tier documentation, which is our local file, master file, and country by country reporting. So just to give a bit of an understanding, what is local file? Local file is more strictly restricted to the local entity in the specific jurisdiction. And then it's always prepared at an entity level. There are only few countries that allow to club more than one entity. So it generally, from a OECD standpoint, every subsidiary, every entity of a global MNC have to prepare. And then in that local entity, we're going to look at specifically the transactions with related party for that particular physical year end, and then how we look at the function analysis and how we determine the comparable analysis methodology in justifying that, and then making sure that local financial statements are fitting with the margin that which are aligned to the local accounts. So that is more on the local file, whereas master file is a completely different. It's more of a overview, like high level overview of the whole group. So it's generally prepared in countries where the main headquarter or a parent company is located, and then where the consolidated financial statements are prepared. So the master file kind of gives you a bit of an overview about what is the whole organizational structure, the products that you have, what are the important products that you have, and what is your value chain, what are your revenue drivers, and then how are the policies set. And then we're also looking at the group financial statements. And also, are there any services? Are there any intangibles? Or are there any other functions across the group that they do that actually generates revenue? So it's just a more of a high-level bird view. And the third country-by-country report is it's another way of looking at a high-level overview, but specific to financial data. So we go into a level where how much each country generates revenue and generates profits, and how each country in their specific local tax jurisdiction, what are the tax they're paying, and then what are the countries their operations are, and they go into the level of looking at the employees level. So it also clearly it helps you to understand if there is a base erosion, because if you have a revenue generation company with millions of dollars, and then you have one employee, and then if what particular function exactly they're doing. So this gives you the overall. And again, this is generally filed at the jurisdiction of the headquarters as generally as master file. But few other jurisdictions, what I have seen in my experience in Asia or in the Middle East, they do expect a copy of master file or a country by country report, or at least a notification if there is no exchange of information between the headquartered country and the subsidiary jurisdiction which is there. So this is kind of a bit of an overview. Any questions before we go into the particularities of local file, master file, and country by country reporting?
No, thank you.
So the first is local file. Local file is divided into more of a structure specific to the local entity, as I mentioned. So we go into the organizational structure or a legal entity level of that specific entity. For example, if it's a US-based entity, we discuss the local management, what are the individuals, and then where are their offices, their local organizational chart, then followed by what is the local business strategy that you're looking at, and are there any business restructurings or any specific things that are there. And then we're also looking at the local competitors of that group locally in terms of their functions. If they are distributors or if they are manufacturers, we're looking at in that industry, are there any information there? And then we quickly go into the control transactions where only this entity is involved. It can be services, loans, guarantees, both financial and performance guarantees, or any license of intangibles, or intra-group payments or anything basically in terms of revenue generation or cost. So it can be outbound or inbound, and then we identify at a transactional level for the overall year, and then the next step we do is the comparability, the benchmark. So we do sometimes the benchmarks at a regional level, but until unless the standard OECD level of judgment is if we are able to get a country-specific data as well, then in terms of economies of scale of each country and then the growth rates of each country, it's important to find locally viable in terms of the standard of economies of scale. But sometimes it do happens that because of the database and practical issues, we won't be able to find, and then we ended up doing more on the regional side where this benchmark can be used also, not only in just one local file, but a couple of other local files in the region. And then comes, if there are continuing to the comparability, also to the level of arm's length and the methodology and adjustments, where every transaction we need to define here what method that we are selecting. And then also we are also looking at, are there any unilateral or bilateral, multilateral APAs, advanced pricing agreements with the tax authority. And then of course the financial information which is specific to that entity, and then making sure whatever the transfer pricing policy for each transaction in terms of expenses or revenue is reflected in that US entity profit and loss account. So I think we just go deeper into the local aspects, and then we do prepare high level. These are the high level 5 headings I can put through to prepare the local file to do that. So this is just to give you a very high level overview of the local file. Now I'll just move to the next one, which is master file. Again, master file, as I said, very high level. So master file talks about if a group has operations in 20 countries, and for example, for benefit, let me take a chocolate manufacturing company based out of the US, and then they have operations across the globe. So here in this case, we're looking at the whole legal and ownership chart for all the 20 countries, along with the headquarters, who owns, and then we're looking at of course the geographic locations, and followed by the most important drivers of business profit. So we look at the supply chain of the group, and we would like to highlight the top 5 largest products or service offerings by turnover, or to put it in a way, any service or any product that generates more than 5% of the group turnover. So we are considering that for part of our analysis. And then we also delineate each service arrangement in terms of a research function, or in terms of, just to give an example, in terms of manufacturing function, then distribution function, procurement function. So I would say the end-to-end supply chain from the cost to final revenue generation, where we'll be discussing across these 20 entities. And then finally, the important geographic markets where they're operating. And then it is also important to look at, in terms of geographic markets, that's also helps us to understand while setting a policy of how we wanted to benchmark these geographic markets. And then also the other thing, difference is when you look at it in terms of the movement of the goods to or services within the group, it can sometimes we do have a service center centralized services. It can be, for example, in Mexico, supporting whole of North America region, or in Egypt, supporting Middle East and Africa region, or it's in India or Philippines, supporting Asia Pacific region. So if there are specific centralized service centers, or centralized research centers, or centralized cash pooling centers that they manage treasury functions within the group, I think we need to look at their perspective and then understand and see how they're getting remunerated and how the policy is set. But in this document, we don't go further into how the policy is tested or established. It's more to just to see whether what are we doing it, and then whether we do have intra-group agreements or not. And then the next one plays a very important role, which is intangibles. So we are looking at intangibles in terms of where is the R&D activity exactly happening within the group, and then who is the economic owner of that, and who is actually the risk owner in terms of if something goes wrong, who is taking the responsibility of the risk within the group, and then who is also the legal and financial owner if somebody is investing the money for building that. So I think that delineation is quite required to understand who should get remunerated. If it's just a financial function of support that a loan is taken to develop certain kind of intangibles, then we're just looking at just to paying interest rate for that company. Of course, depends on the risk it's going to take. But if it's just a basic financial function, then probably just get remunerated only on the interest and not on the profits. So I think that kind of delineation is required across the group. And like I was just talking about the central financing function, any financial arrangements, it can be, you're looking at especially a distribution entity with 20 subsidiaries, you're dealing with 4 or 5 different trading currencies like euros or like Swiss francs or USD, then we're looking at a centralized hedging function within the group, or how they're trying to do that. And then if they're doing cash pooling, or if they're trying to do treasury function, how they are getting remunerated in terms of policy. And then, of course, the financial and tax positions. We're looking at a group consolidated level, and also at a local level, if there are any loss-making entities. And then if there are loss-making entities, the reasons, and if they are, as we discussed in one of the last sessions, if they're just a routine distributors or a routine contract manufacturers. So what is the issue with it for loss making? Because it is expected that they're remunerated just for their functions and they don't have to bear any risks. I think this is where we need to see within the group in terms of financial and tax positions, and see if there are any anomalies, and then how do we correct, or how do we put through that kind of a data. And then finally, we're looking at the advanced pricing. So it can be country specific level, or it can be also between 2 countries, more than unilateral. It can be bilateral between countries. And sometimes you do have unilateral where, for example, we have a Mexico example, to take a Mexico with the USA, and then Mexico is attended 5% or 6% on the margins, and then and then that's agreed with locally. But it may also happen because US doesn't agree with that percentage. So I think we need to also understand and check that perspective, and then also see what is the information that we have, and then we are basically getting that information and then putting in the report. So this is more specifically on the master file. Next, we go to the country by country reporting. So country by country reporting, again, the consolidated, the main entity which is consolidated parent entity, group revenue of more than 850 million USD. And again, with the US perspective, we're looking at anywhere beginning on or after June 30, 2016. And so there is also a standard forms, a form of 1 and 2, which I will be showing you in the next. So as I mentioned, it's more to do with financial data. Basically, you are looking at the whole global allocation of income tax paid, and then certain indicators of local economic activity, including all the jurisdictions. And it's divided into 4 sections. First starts with more on the revenue, which is like revenue, both related and unrelated for each and every entity across the group. And then profit before taxes, and then the income tax paid on cash basis and accrued on the current year basis for each and every entity. And then indicators of economic activity, that's number of employees, stated capital. We're looking at accumulated earnings and tangible assets. I think this is a very important indicator, which generally tax authorities during the audit do check with specific country operations, and then what's the earnings there, and then the number of employees, and what are the, if there are assets, or are there any, for example, if you said that if there is a R&D center set up, in my experience, they have also checked whether the head of R&D actually sits out of that country, or is there agreement clearly there, and then if that entity is actually paying salaries to the employees there. So the information is collected from there. And then the next one is the list of the entities and business activities, for which is like holding companies and managing IP companies, and then R&D, then who does the procurement, and then also who does the manufacturing or production, and also we can add something like distribution activities across the value chain of the group. And further, they go into that they wanted to even understand additional information about if there is even a change of an activity of a company from previous year. They wanted to understand why the change, and then they wanted to have a disclosure from year to year. If last year it's distributing and this year it's doing something else, or the entity got closed, or they have started a new process, they wanted to understand that. And also the exchange rate used for the functional currency of the reporting entity, and they also wanted to know for each entity what's the exchange rate is used. So if you go to the next slide, this is how a standard form, a template of a country by country reporting looks, which is also standardized for the US purposes. So you need to fill in this form, and then the practical issues that mostly for the country by country reporting is how these expenses are treated in every tax jurisdiction. And then when you sometimes collect the data from a centralized perspective, they maintain a certain kind of data, but then when you probably like in this case for a US headquartered company, the data would have been in a currency of USD, and then maybe they have operations in Turkey. So locally, they do maintain only Turkish lira, or they maintain in EGP, and then the data conversions, and also how it's collected at central level, and then to showcase the data is also one of the important factors while preparing this report. And then, of course, the next form, the table 2, actually talks about the functions, where they have given specific standardized ones that you can tick in for each and every country of operation. And then finally, any additional information as discussed, any changes or anything that important from a year on year that is there. So this quickly kind of gives you the idea of all the three, the local one, the master file, and then of course the country by country reporting to the kind of data is expected for each group. And just to understand, it's a year-on-year exercise. So every year, the local file needs to be prepared. For sure, the benchmarks needs to be prepared for a year, and then that can be used for 3 years. But still, the final comparables needs to be updated with the specific year in terms of the financials. And again, the master file needs to be updated. It can be prepared a year, but make sure that at least within 1 or 2 years, it needs to be updated if there are any changes on the policy, standard policy, or if there are any changes or any new transactions that take place, or any other revenue or any other changes. Then when it comes to country by country reporting, again, it needs to be prepared every year, because the financial data would change. And then generally standard, the local file and master file needs to be prepared or to be ready by the time you're filing your tax returns in every jurisdiction, every specific jurisdiction. And then for country by country reporting, we have clearly seen, I would say most of the countries are standardly, they accept December 31st. So once you finish the filing the year, then you have almost, if it's March, April, May, or June tax filing deadlines, then you get 6 to 9 months to collect this data and then then prepare the country by country reporting. So this is just to give you an idea and flavor of the documentation. Before we go to the US specific documents, any questions from the team? Any other points that you wanted to add?
I think we're good.
Okay. So I just wanted to also just to look at what exactly in terms of, as I mentioned, the US regulations clearly don't say local file, master file, but they do say country by country reporting adoption from the OECD. But more or less, in terms of during an audit, the expectation from the revenue service in terms of the documentation requests is more or less close. So they do standardize in close to 10 principal documents, which have given from the regulations for each of the document, which section talks about that each of the documents. More or less, if you go, it also clearly, and it's basically a mixture of both local file and master file, I would say, but in terms of when they're collecting these documents. So the first document talks about taxpayer business, including the economic and legal factors and services. So basically, you're looking at a really transactional level data. And the second one, you're again looking at a description of the organizational structure of all the related parties engaging specific transaction with foreign affiliates. Then the third document we are looking is they're quite interested in cost sharing agreements and also the service cost method especially for the services. As you are aware, the methods are a little bit slight different in terms of nomenclature. Instead of a transaction at margin method, it's CPM control methods. But in the most important one is one of the ones which generally for the services method, where you're trying to understand the cost benefit analysis, whether the service is provided or the benefit of the group. The service cost method is widely an acceptable method that is used in the USA. And then, yes, that specific analysis and the policy is needed for any service transaction where the US entity is involved. And then comes the methodology and then selecting the method, which is more of a standardized. And then if there are any alternative methods, we do have other methods especially for commodities, you're looking at local publications. And if there are also during valuations, if you're looking at any specific other methods for valuing an IP or valuing any other stuff, I think that's also the data that needs to be clearly reflected in the document that we maintain. And it's a kind of a checklist. You prepare a local file, then I've seen most of the filings when we do it there. So you do keep this list, and then you do tick if there's something missing. Generally, the tax authorities do come back and ask for it. And then come the comparability analysis after that. And also, if there are control transactions, you're looking at internal data first, why the internal data, whether the internal data is used. If the internal data is not available, or rather it's not applicable, then we further go into the external using the standard databases that we have, that we work across. And also in terms of when you are in the year end, when you're filing a tax return, so there is also information related, a brief description of summary need to be filed by every taxpayer that have operations abroad to discuss on what methodology was used, and then the information should be given there. And also we have seen a bit of an experience that once you file that, and then again if there's during an audit, the document is asked and then if there are differences, what we have written there, and then what we have used in the transactions, and then we also have seen certain adjustments. I think the alignment between the local financial statements in terms of what related party transactions are considered, and then the same thing that reflected in the tax returns, or also for the foreign entities operating, that they need to file a form of the transactions, that, and along with the documentation that you prepare and keep it, there should be a clear alignment. And then yes, then also that you're maintaining a record system about all the documents that they have, and then we are ready within the 30 days when the taxpayer requests those documents. I think I would say more or less they're quite aligned with the OECD. It's just that the nomenclature is different, and then the way that the document is prepared, or probably the way it's written, is little different in terms of that's it, in terms of nomenclature. I think this is more or less the idea of the USTP documentation, and also like what is globally done is those three, and then of course you will do have penalties and during the audit. So, yeah, this is, I thought, like give you a bit of a flavor. Any questions, Eve, Ralph, Leo, that you have about documentation?
One comment, no, not a question, but a comment. So the IRS, and that was back in 2020. They published transfer pricing documentation best practices and frequently asked questions. They updated on a regular basis. Last update was last week, and that gives kind of an overview and details what the IRS is expecting, and what they, based on their examinations, reviews of transfer pricing documentation submitted by taxpayers, what they saw could be improved, and what they would like to see. So just as a comment to the document.
No, thanks, Ralph. That's a great point. Yeah. Any other points? Any other questions on the document or on the documentation side? Yeah, I think this is just to give you a bit of an overview on the documents and what exactly on the transfer pricing, and then what are we looking at. And yeah, I mean, for any next session, or like if you have any particulars, or like any particular topic about it on it, like we're happy to support.